Welcome to JCOPE's online ethics orientation course, the first ethics class you are required to complete as a person newly subject to the financial disclosure filing requirements. This class should take you approximately 45 minutes to complete. When you are done viewing this video, you must complete an affirmation form and submit it to your agency ethics officer, who keeps track of your ethics training and is tasked with updating your ethics training history in the online FDS system. You will find instructions for getting credit for completing this course at the end. Ethics laws were enacted to prevent both actual and apparent conflicts of interest between your state position and private interests. This orientation seeks to prevent ethics violations before they occur by providing an overview of New York State's ethics laws and regulations. Please note, this online ethics orientation highlights certain, but not all, provisions in the ethics laws. In addition, your state agency or entity may adopt its own ethics regulations and policies that are more restrictive than those covered in this course. Please consult with your agency ethics officer regarding additional ethics policies that may apply to you. We will begin with a brief overview of the Joint Commission on Public Ethics, also referred to as JCOPE, and how we can help you as you continue in state service. In Chapter 1, we will review Public Officers Law, Section 73A, discussing the requirements for filing an annual financial disclosure statement and mandated ethics training. In Chapter 2, we will examine Public Officers Law 74 to understand the general ethical standards of conduct that apply to all state officers and employees. In Chapter 3, we will review Public Officers Law 73, including restrictions and procedures related to outside employment and professional activities, political activities, nepotism, gifts, honoraria, travel, and job opportunities after separation from state service. Finally, in Chapter 4, we will review both Civil Service Law 107 and certain sections of Public Officers Law 74 involving restrictions on political activities. Let's begin. We will start with a quick overview of the Ethics Commission and the role it plays in state ethics. New York State Joint Commission on Public Ethics, JCOPE, is the agency that enforces New York's ethics and lobbying laws. JCOPE's jurisdiction includes executive branch officers and employees, including those serving as unpaid or per diem officers or members, employees of SUNY and CUNY, and closely affiliated corporations like their research foundations. The 4 statewide elected officials, the governor, lieutenant governor, attorney general, and comptroller. Members and employees of the legislature, candidates for statewide office, and certain political party chairs. And lobbyists, clients, and public corporations as defined in the Lobbying Act. JCOPE's jurisdiction is broad, and so is its mandate. The key functions of the Ethics Commission are education and guidance. The Education Unit and Advice and Guidance Unit provide advice, guidance, and training on New York's ethics and lobbying laws. Financial disclosure. JCOPE provides ethics oversight through financial disclosure of more than 30,000 executive and legislative branch officers and employees. Lobbying oversight. JCOPE provides lobbying oversight through lobbyist and client reporting, and investigations. JCOPE investigates and enforces violations of the applicable laws, including both the ethics and lobbying laws. Now let's turn our attention to the requirement to file annual financial disclosure statements. We will review this requirement that applies to certain New York State officers or employees. Let's get started. Financial disclosure statements are also known as an FDS. It is a publicly available record containing information about the financial holdings and professional associations of filers and their spouses. The FDS is filed annually. Its purpose is to help you identify and address conflicts of interest. They also provide transparency to the general public to help ensure there are no prohibited conflicts of interest between your state duties and any private interests. Perhaps you're wondering why you're required to file an annual FDS. You are required to file if you meet one of the following criteria. You are designated by your agency as a policymaker. This includes unpaid or per diem members of boards, councils, and commissions. You are an employee whose salary exceeds an income threshold, called a threshold filer. This threshold is pinned to the CSEA Salary Grade 24, regardless of union membership. You are a statewide elected official or a candidate for that office. Or you are a political party chairperson serving a large population. Even part-time employees may still be required to file an FDS. If you don't think these criteria apply to you, please contact your ethics officer or JCOPE to confirm your status as an FDS filer. So when do you have to file your FDS? There are 2 different due dates, depending on your job. For the large majority of state employees and officials, the annual filing due date is May 15th. If you are a professor for SUNY or CUNY, your annual filing due date is November 15th. These are also the deadlines if you want to request an extension for filing an FDS. When you first become an FDS filer, you have 30 days to file for the previous year. So what happens if you fail to file your annual FDS? If you fail to file your FDS, or if you file a deficient FDS, JCOPE will notify you. Once notified, you then have 15 days to comply or correct your filing. If you fail to cure the problem, JCOPE will send you and your appointing authority a notice of delinquency that advises you of the consequences. Please note, notices of delinquency are made publicly available on JCOPE's website. If you still fail to comply after receiving a notice of delinquency, a hearing is held, after which you may be subject to a civil penalty of up to $40,000. In lieu of a civil penalty, or in addition to such penalty, JCOPE may refer this violation to the appropriate prosecutor for criminal prosecution as a misdemeanor offense. If you have any questions about how to complete the FDS form, contact JCOPE and ask to speak to a filing specialist. Let's look now at some additional information about these forms. First, it's important to understand that an FDS is a publicly available record, but most of them are not posted online. FDSs for statewide elected officials and legislators are posted on JCOPE's website. Copies of FDSs for all other state officers and employees are only made publicly available upon request in accordance with JCOPE regulations. Generally speaking, the only FDS forms requested are by the media in response to a public figure being accused of breaking the public trust. As an FDS filer, you may have privacy concerns. As a filer, you can make a request to redact specific information from your FDS. Note that JCOPE automatically redacts the name of any minor child from the publicly available version of the FDS. Or, you may seek a limited exemption from responding to a specific question regarding a spouse or minor child. Getting an exemption from the filing requirement entirely is an option for some FDS filers. But note, exemptions from the filing requirement are only available to threshold filers. JCOPE evaluates these requests on a case-by-case basis. In addition, you may request an extension of time to file an FDS if you have a justifiable cause or experience an undue hardship. Forms for requesting an exemption or extension can be found on the JCOPE website. The due dates for these requests are on May 15th or November 15th, depending on your filing due date. In addition to your obligation to file an FDS, filers are also required to complete ethics training on an ongoing basis. Executive Law Section 94 describes the ethics training requirements for FDS filers, including the requirement that training be delivered live. The first course is the Online Ethics Orientation. You are currently viewing this course. Individuals newly subject to the FDS filing requirement are required to complete the OEO within 3 months of the date they became an FDS filer. After completing this OEO course, You are next required to take the Live Comprehensive Ethics Training course, the CETC, within 2 years of becoming an FDS filer. The CETC is a live, 2-hour, instructor-led course. Each agency should offer this course periodically for FDS filers. After completing the CETC, FDS filers are required to complete refresher training every 3 years. The ethics seminar is a live, 90-minute instructor-led class, and it provides an update on any changes in the applicable laws, regulations, and policies. Retaking the CETC will also satisfy this refresher training requirement. Contact your ethics officer for live ethics training opportunities at your work location. In Chapter 2, we will explore the Code of Ethics and other applications of Public Officers Law 74. Let's begin with the Code of Ethics. The Code of Ethics in Public Officers Law 74 is intended to prevent the use of your official position or authority for the benefit of yourself or another. The Code of Ethics embodies the guiding principles of impartiality, confidentiality, stewardship of state resources, and integrity. It is important to note that the Code of Ethics not only addresses actual conflicts of interest, but also the appearance of such conflicts when performing your state duties. The Code of Ethics applies to all state officers and employees, including unpaid and per diem officers. The Code of Ethics is centered on 9 standards of conduct that we are all expected to adhere to. These 9 standards of conduct aim to prevent conflicts of interest, and they apply to all New York State employees. Let's review them briefly. Standard A deals with impartiality. It says that you shouldn't accept outside employment that might impair your impartiality when performing your state job. Standards B and C relate to confidentiality. This first requires you to know what information is considered confidential in your job. Standard B says that you should not disclose confidential information you have access to due to your state employment. And Standard C says that you should not disclose confidential information to benefit yourself or someone else. Standard D relates to misuse of position or resources. This prevents you from securing unwarranted privileges or favors based on your state job, and requires good stewardship of state resources, or not using resources of the state for private gain. Standard I relates to doing business with the state, and it says that you can't contract for work with entities that are licensed or regulated by your agency. For example, if I work for the Department of Health and Acme Hospital is regulated by the Department of Health, I can't contract for work directly with Acme. I may also be prohibited from working at Acme as a DOH employee. Standards F and H are the integrity standards. They ask you to examine your actions through the lens of the public. These standards require you to conduct yourself in a manner that does not give an impression that you could be influenced or would attempt to influence someone else, or raise suspicion among the public that you're personally benefiting from your official position. Standards E and G deal with financial conflicts, and they say that you should abstain from personal investments that conflict with your official duties as a New York State employee. You must abstain from transactions with any entity in which you may have a direct or indirect financial interest. You can't participate in any matter related to your state employment where you may have the opportunity to gain financially. There are penalties for violations of these standards of conduct. Violations of these standards can lead to civil penalties of up to $10,000, including the value of any gift, compensation, or benefit received. Agencies can also impose their own consequences for violations of the ethics laws, up to and including termination of employment. In addition to the Code of Ethics, there are also a few employment restrictions that are found within Public Officers Law 74. The first of these employment restrictions is the reverse 2-year bar. If you are entering state service from the private sector, this bar may apply to you. In general, it seeks to prevent the appearance that you, in the performance of your new state duties, may give preferential treatment to your former private sector employer. If it applies to you, you may be required to recuse from matters directly involving your former private sector employer for a 2-year cooling-off period. If your ethics officer or JCOPE determines that your recusal is appropriate, it runs for 2 years from the date that you terminated employment with the private sector employer. For help determining if the reverse 2-year bar applies to you, please contact your ethics officer or JCOPE. There are other provisions of Public Officers Law 74 that relate to future employment. As a general rule, there are restrictions on if and when you may negotiate future employment with an entity or individual that has a specific matter pending before you. If you want to pursue a job with an individual or entity that has a matter before you, you'll have to engage in a 30-day cooling-off period first. If you receive an unsolicited job offer, or if you're interested in soliciting an employment opportunity, you may only pursue an employment opportunity after waiting 30 days from the date the matter before you closed, or the date on which you notified your supervisor and ethics officer of your intent to pursue a job offer, and then recuse yourself from the matter and any further contact with the entity or individual. You have a duty to promptly notify your ethics officer because in some circumstances, a job offer can be considered a prohibited gift. Also, it's possible that the offer was intended to influence you or an agency decision. Please note, there are additional employment restrictions in place when you leave state service, which we will review soon. Whereas Public Officers Law 74 contains the Code of Ethics, Public Officers Law 73 contains specific restrictions on business or professional activities. Who is covered by Public Officers Law 73? While the Code of Ethics applies to all officers and employees, the restrictions in Public Officers Law 73 apply to all state officers and employees except unpaid or per diem members. One of the most important restrictions relates to outside employment. If you are a policymaker, other than those who are unpaid or per diem, you are required to obtain certain approvals based on expected compensation prior to seeking or accepting any other employment or compensation for professional services. In addition, JCOPE approval is required for holding another public office or serving as a director or officer of a for-profit corporation or institution, regardless of compensation. Keep in mind that your agency may have additional policies that restrict your outside activities. Check with your ethics officer for additional restrictions that may apply to you. There are also some restrictions on political activities as a state policymaker. State employees are expected to remain nonpartisan in the workplace. Policymakers are restricted from serving as an officer in a political party or organization, or as a member of a political party committee. Public Officers Law 73 also prohibits other kinds of activities. Nepotism laws seek to prevent someone from giving special considerations to a relative in the workplace. A relative is a person who is a direct descendant of the employee's grandparents or the spouse of those descendants. In addition, anyone living with you is also considered a relative, regardless of actual familial relationship. The law prohibits you from participating in personnel decisions related to your relatives. Also, you can't give state contracts to relatives or invest state funds with a relative. A best practice is to inform your supervisor or ethics officer if you are asked to be involved in personnel decisions for anyone you may know well. Let your ethics officer make the determination of whether recusal is appropriate. The next restriction relates to the acceptance of gifts. The general rule is that you can't take a gift when it can be reasonably inferred that the gift is intended to influence you or reward you for official actions. Please note, many agencies have gift rules that are more restrictive than those outlined in Public Officers Law 73. Many agencies have a zero-tolerance policy on the acceptance of gifts. Check with your ethics officer for the gift rules that apply to you. What is considered a gift? It's any item or service of more than nominal value, which is not specifically defined, but Jacob will generally consider nominal value to mean having a fair market value of $15 or less. Some common forms that gifts might take are money, loans, forbearance, lodging, refreshments, services, travel, meals, entertainment, or a promise having a monetary value. In addition to the value of a gift, it's also very important to consider who is offering it. Before accepting a gift, consider whether the gift is being offered by an interested source. An interested source can be anyone with a vested interest in influencing an official action on your part. An interested source is anyone who is regulated by your agency, has contracts with or seeks contracts with you or your agency, is a registered lobbyist or client that lobbies you or your agency, or the spouse or minor child of such a lobbyist or client, someone who is involved in ongoing litigation that is adverse to you or your agency, someone who received or applied for funds from your agency at any time during the previous year up to and including the date of the proposed or actual receipt of the gift, or someone who appears before your agency for any official action. When conducting a gift analysis, a gift from an interested source would be prohibited because of the appearance of an intent to influence you or your agency, or to reward you for some official action on your part. Contact your ethics officer or Jacob for guidance prior to accepting a gift from an interested source. Some things are not considered gifts and are excluded from these gift rules. Here are some of the more common exclusions to the gift rules. Complimentary attendance at bona fide charitable or political events, awards or plaques in recognition of public service, promotional items with no resale value, for example, the giveaway items you may get at a conference, discounts available to the general public, for example, cell phone discounts offered to all New York State employees, food or beverage valued at $15 or less per event, or meals and beverages provided to participants at professional and educational programs, honorary degrees, gifts from those with whom there is a demonstrated familial or personal relationship, contributions reportable under the election law, local travel payments for tours related to your state job, travel, food, and lodging expenses for speakers at informational events hosted by a state agency or college or university. You may, therefore, accept these items or services from anyone, including an interested source, provided that your acceptance does not violate Public Officers Law 74 by creating an actual or apparent conflict of interest or giving the impression of improper influence. Another very common gift exclusion relates to widely attended events that you may be invited to as a state officer or employee. You might be able to accept free admission to a widely attended event if it meets the following conditions. The complimentary admission must be offered by the sponsor of the event, and 25 people who are not from your agency are invited to attend. These first two criteria help prevent an interested source from creating an event specifically to target you or your agency. Next, the event must be related to your official duties or responsibilities, which can be satisfied if there is a speaker who addresses an issue of public interest or concern. This third criteria is specific to you, the employee. This event must be related to your official duties. Or, the event allows you to perform a ceremonial function appropriate to your position. For example, throwing out the first pitch at a baseball game. Also note, food and beverage is only permissible if it's offered to all participants. And this exclusion does not cover any entertainment, recreational, or sporting activities at the event, unless the presentation addressing the public interest or concern is delivered during that activity. Please give your ethics officer plenty of advance notice so they can thoroughly vet this event prior to your attendance. Now let's review the gift rules with a handy visual. Please remember that your agency may have a zero-tolerance policy towards the acceptance of gifts. But if your agency allows the acceptance of gifts, it's important to consider the following questions. We first must ask if the item or service is valued at $15 or less, or if it's one of the gift exclusions. If yes, the item or service may ordinarily be accepted, as long as the acceptance doesn't create an actual or apparent conflict of interest. If the item or service is greater than $15 and is not excluded, then we must ask if the gift is being offered by an interested source. If yes, the gift is presumptively prohibited, unless it is unreasonable to infer that the gift is intended to influence you or to reward you for official actions. If it is not offered by an interested source, the gift is ordinarily permissible, unless it could be reasonably inferred that the gift is intended to influence you or reward you. There are other gift considerations as well. In most circumstances, you cannot redirect an impermissible gift to a third party, including your spouse or child or a charitable organization. This means that if you're not allowed to accept the gift, you can't give the gift to someone else. Also, if you accept multiple permissible gifts from the same source, you could, depending on the circumstances, violate Public Officers Law 74 by creating an actual or an apparent conflict of interest or an appearance of improper influence. For example, if you work with a vendor who regularly buys you coffee or picks up the lunch tab, it could create the appearance that these are gifts intended to influence you. We have to apply this same kind of thinking to other things of value that may be offered to us during our service to the state. Let's consider honoraria. This is a payment offered in exchange for a professional service or activity, such as giving a speech, writing an article, or serving on a panel at a conference, that is not part of your official position or duties. An honorarium may include expenses incurred for travel, lodging, and meals related to the service. These are payments for services that are not part of your state job. Because an honorarium is a thing of value, there are restrictions on their acceptance under Public Officers Law 73 and 74, and you will need advance approval from your approving authority prior to accepting an honorarium. Faculty members of SUNY and CUNY, and certain other state officers and employees with specified titles, are exempt from these approval requirements, provided that the service performed is within the subject matter of their official academic or research discipline. Another thing of value that needs approval is for official activity expense payments. Official activity expense payments are payments or reimbursements from a third party for travel and other expenses, such as registration fees, food, and lodging, for an activity that is a part of and related to your official position, providing that certain conditions are met. The same kind of gift analysis needs to be done prior to accepting these travel reimbursements, so approval from your approving authority is required prior to accepting any such payment or reimbursement. A very important thing for you to be aware of are the restrictions on state employees when they leave state service. There are post-employment restrictions that will apply to you when you leave state service. They include a 2-year bar and a lifetime bar. Also known as the revolving door restrictions, these prohibitions exist to prevent former state officers and employees from leveraging the special knowledge, expertise, and contacts they gained in state service for the benefit of themselves or others. The post-employment restrictions apply to former employees, regardless of how long they have been in state service. They also apply to part-time and seasonal employees. Let's take a closer look at the 2-year bar. The 2-year bar creates a cooling-off period to prevent the appearance that you could be unduly influenced. Restart. The 2-year bar creates a cooling off period to prevent the appearance that you could unduly influence your former agency. The 2-year bar contains 2 restrictions, both of which apply for 2 years immediately following your separation from state service. The first restriction is the appearance or practice prohibition. This says that you may not appear or practice before your former agency. These restrictions are aimed at preventing a former state employee from influencing a decision of or action by their former agency, or gaining information from the agency that is generally not available to the public. This prohibition applies to both paid and unpaid work. Some examples of prohibited appearances or practices are negotiating a contract with a former agency, submitting a grant proposal or application to a former agency, or representing a client in an audit before a former agency. The second restriction is the Backroom Services prohibition. This says you can't accept a paid position that would require you to perform services behind the scenes for your new employer that are related to a matter before your former agency, even if those activities do not involve directly appearing or practicing before your former agency. Some examples of prohibited backroom services are preparing documents for a private firm when it is reasonably foreseeable that the documents will be reviewed by your former agency, assisting another person in the creation or development of an application to be submitted to your former agency, or assisting another person in the creation or development of a plan or strategy for influencing a decision of your former agency. Please seek guidance before accepting a private sector job that may ask you to use the specific agency knowledge or experience you gained while in public service. Let's look next at how the lifetime bar may apply to the work you perform as a state employee. The lifetime bar says that no person who has served as a state officer or employee shall, after ending employment, appear, practice, communicate, or render services before any state agency on behalf of any person, firm, or corporation in relation to any case, proceeding, application, or transaction that such a person was directly concerned with and personally participated in during their employment. That means that if you participated in a specific matter while in state service, if that same matter is before any New York State agency, you cannot ever participate, regardless of compensation, or if the same matter is not before a New York State agency, you may perform services on the same matter, provided you receive no compensation. The lifetime bar is extremely fact-specific and is not a common circumstance. If you have any questions regarding the application of this bar to your professional circumstances, please contact Jacob for guidance. Violations of these provisions can carry a penalty of up to $40,000, including the value of any gift, compensation, or benefit received. In addition, your agency may impose additional consequences for violations of these ethics laws, including termination of employment. These penalties can be substantial, so seek guidance from your ethics officer or JCOPE if you have any questions about these aspects of the public officer's law. Let's look next at the laws that are designed to keep politics out of the state workplace. Chapter 4 gives an overview of Civil Service Law 107, known as the Little Hatch Act, and provisions in Public Officers Law 74 that govern political activities. The Little Hatch Act addresses political activity in state service and puts rules in place about what can and cannot be done at work. It is modeled on the Federal Hatch Act, which also seeks to prevent political activity in the workplace. The term political activity means doing something in active support of or opposition to a political party or a candidate for partisan political office or a partisan political group. JCOPE has the authority to investigate possible violations of Civil Service Law 107 by executive branch employees. Let's look at how this law tries to preserve impartiality in state service. Here are the types of behaviors that are prohibited by the Little Hatch Act. You can't make personnel decisions based on another's political affiliation. You can't ask potential employees about their political affiliations. You can't coerce an employee to give anything of value to a political party, committee, or organization. You can't use state offices or other resources for soliciting or collecting political contributions. You can't use or promise to use your official authority or influence in exchange for political action. In addition to the Little Hatch Act, Public Officers Law 74 also has provisions that prevents political activity in the workplace. Here are some real-world examples of political activity that would be in violation of Public Officers Law 74. Circulating a candidate's nominating petition within your office. Outside the workplace, on personal time, is allowed. Using the computer in your office to make a campaign brochure. You can't use state resources to produce any political materials. Sending email invitations to campaign events to your work friends. You can't use state email for political communications, even to friends you know support your candidate. Using your state internet access to forward email received by a politician or political party. If you receive a political communication to your work email address in error, delete it and contact the candidate to give them your personal email address. Even forwarding a political email to your personal address is a violation because you've now used the state's internet connections to distribute political materials. It's important to keep your work life and your political activities separate. We encourage you to reach out to your agency ethics officer or to JCOPE for guidance on the ethics laws and policies that apply to you. One of the central missions of JCOPE is to provide guidance on matters of state ethics. The purpose of this training was to give you greater awareness of your obligations under the ethics laws. But if you have any questions, please contact your ethics officer or JCOPE. For general questions regarding your requirements as an FDS filer, call JCOPE at 1-800-87-ETHICS. Press 3 for the FDS Help Desk. Press 2 to reach the Attorney of the Day. For questions on how these ethics laws affect your individual circumstances, contact JCOPE's Attorney of the Day at the number above, or by sending an email to legal@jcope.ny.gov. For questions on your ethics training requirements, email education@jcope.ny.gov. If you don't know who your ethics officer is, your Human Resources Office should be able to tell you. Or you can log into the FDS system where you file your annual FDS form. There is a help button in the upper right corner of your profile that will allow you to send an email to your ethics officer. A link to the FDS system can be found on the JCOPE website. Stay tuned for important information about how to receive credit for completing this course. This concludes the online ethics orientation. Please note that you are still required to complete the live, in-person, comprehensive ethics training course, the CETC, within 2 years of becoming an FDS filer. In order to get credit for completing today's course, you will need to provide a signed, dated copy of the affirmation form to your agency's ethics officer. This form can be found on the JCOPE website on the same page where you found this video. When this video ends, return to that page and download the affirmation form found in the Additional Resources section posted just below this video. Once completed, submit the completed form to your agency ethics officer. For further information on the ethics laws that govern state service, please see the Plain Language Guide to the State Ethics Laws, available in the Additional Resources section directly below this video. Congratulations on your new position in state service, and thank you for your attention today.